Hi, welcome to Private Banking Advisory. Today is Thursday, the 4th of May, and we have quite a lot to discuss today. Uh, Again, it is basically the banking system that's in the limelight at the moment. We have heard that various voices in the United States claim that the banking crisis has been resolved. The troubled banks have been put into safer hands. The big winner, of course, is JP Morgan, which seems to get bigger and bigger with every crisis. And ultimately, one has to expect that JP Morgan will become the last bank standing in the United States if things continue the way they do. Apart from this, which is basically a bit a joke, one has to say that the banking crisis, in my opinion, is not over. The reason is that as long as there is no blanket guarantee for all deposits, investors in the United States will invariably gravitate to alternative investments like money market funds that do have an implicit guarantee by the government and ironically get great investment opportunities by the Federal Reserve through the reverse repo purchase agreements that basically allow these money market funds to obtain quite attractive investment returns without taking too much risk. At some stage, of course, these money market funds are also a risk in their own right. They have reached an enormous amount of outstanding assets, which is probably about 5 trillion US dollars. That's 5,000 billion for you in real money. But this is a problem for the future, in my opinion. What is interesting is that the banking system in Europe is relatively becalmed. If anything, it looks the other way because banks like UniCredit, HSBC, Barclays, and Lloyds register huge profits, basically profits that they make courtesy to the central banks policies in the UK and in the EU. As interest rates get jacked up by the authorities, the deposits that savers have with these banks don't benefit at all or hardly. They basically get measly interest rates. And what is interesting is that the great public in Europe seems to be quite happy to accept their fate. In my opinion, it is a symptom that the mentality in the United States and in Europe is quite different. The American financial system is very fluid. It has a lot of opportunities for savers. Savers are and investors are used to make their own decisions. That's why there is still this large network of retail brokers that operates in the United States, whereas in Europe, everything is in a way quite staid, traditional. The average person on the street is not terribly interested in financial matters. They are not particularly knowledgeable. The financial system is also very parochial, very provincial. Every country has its own little market that is jealously guarded against competition from other countries. And therefore, the average saver has relatively little alternative to a bank deposit. And if anything, the rest of the money is probably managed by some insurance company or some pension fund where the investor really has very little say in the decisions that are made on his behalf. So as long as the banking system exists in its present form, in my opinion, we will have a recurrence of banking crisis. the only solution would be to initialize what is called a limited purpose banking system. That means banks take deposits and lend out the money to borrowers, but they are not operating like a traditional bank where the deposits can walk out of the door at any moment. They really have a system that is more like an investment fund. So savers deposit money, bank lends money, and if something happens on the asset side, the savers take the hit. That means if they put money in, let's say, £10,000 into one of the big banks in Europe or in the United States, suddenly the £10,000 might only be worth £9,500 because basically the bank is operating like an investment fund. It's still a bit early, and this will not be very popular, obviously, with the banking establishment, and also the depositors would not be very happy. But this fiction that a deposit is safe, the bank lends it longer term, there's a mismatch in the maturity, it's just not a very stable situation. At some stage, one has to realize that this is problematic. And while it may have worked for the last 100 or 150 years, in the day of instant access to the money via internet, it's probably not a viable business model any longer. Another subject that hit the headlines during the last few days is that protection for equity investors continue to be watered down. Basically, there was this famous banker in Germany 120 years ago, and he said, investors in equities are stupid and insolent. Stupid because they buy the shares, and insolent because they even want dividends for their investment. Basically, one has to realize that investment in equities is not a fair game to some extent, especially the establishment of more and more dual classes of shares is a sign that the investor is taken for a ride. He gets shares, but he has no say in the company. The owners, the original founders of the company, have all the control, and basically the shareholder, in the great public shareholder, is basically without any voice. The London Stock Exchange just started an initiative to give access to more listings that are based on a dual class share system. The great rating agencies and the companies that dominate the index creation, like S&P 500, etc., they also accept shares of companies that have discriminatory voting structures. And it's a bit a sad situation that the movement towards shareholder democracy and wider share ownership is also used or abused for the benefit of big money, of the super rich that control a lot of the companies that are listed on the exchanges. So today we discussed a bit a different type of subject. It is not directly related to the services that I can offer, which is helping investors managing their money, not by advising them which investments to buy. We are not registered for that, but helping them with controlling the cost of managing their money, monitoring the risk That's inherent in the portfolios that are managed by their private bankers or fund managers. And in that respect, I hope that you will contact me if you need some help. We offer very attractive fees based on what a seasoned professional in the banking, not in the banking, sorry, in the medical or legal field would charge on an hourly basis. If you want to, we can also do a type of subscription, which is based on an annual basis and which would offer you permanent access if you have any questions relating to your money management problems. So please hit the like button. Please subscribe so that my message is put out to a wider audience. And I hope to speak to you soon. Thank you very much and stay well.